Okay, today we are here with Professor Mike Spence, Nobel Prize 2001 of economics, on asymmetric information. So we are also starting a new project that is the title is Free Thoughts on the Future, are interviews on economics, on also on the future related to energy transition, ecological transition, and so on. So there are some questions. So we'll start with this question for Professor Mike Spence. The first one is related to net zero emission target 2050. We're able to reach this. Which are the obstacles? There are also some solutions. Which is your idea about this?
So I think it's theoretically possible, but to be honest answer, Sergio, is I think it's unlikely. Mainly because we're not, how do I say it? Europe will get there, I imagine. I'm a little less sure about North America because we start at such a high level of per capita emissions. But most of the mechanisms that transfer financial support and technology to the rest, important parts of the developing world, are not working very well. So there's a $100 billion commitment that's been made in the course of the various, COP meetings, but only about 10 billion of it's been transferred, right? And so there's a huge investment challenge and a huge technology challenge. And I think when you look at it realistically, you could say, in principle, in some hypothetical world, we could get it done, but it'll be hard to overcome all these obstacles.
Okay, perfect. So if we have a change in the manner in order to calculate the growth rate, so someone told us that maybe if we take into account new indicators, a new manner, a new growth rate, not taking into account only GDP, which could be the picture for the future?
Well, so, I mean, backing up a little bit, there's a very general agreement, growing agreement, that in order to make an assessment of economic and social progress, you have to have multi-dimensional measurement systems, right? And the reason for that is if the fundamental origin of a measurement system is to capture changes in things that really matter to people, right? So their incomes and their material, wealth, if you like, is one thing. Their health is another, right?
Yeah.
A third is whether the society is holding together. Most people have some degree of care about that. They definitely care about education, not in the abstract, in relation to their children and grandchildren, right? Yeah. And those things don't always align. I mean, their correlations vary. We could spend a lot of time talking about when they vary and when they diverge and when they converge. But the point is, and then this has to do with sustainability. Conventional measures that are associated with national income accounting are all based on flows, and they're all short-term, right? Yeah. So they can't possibly capture the sustainability issue, right? Because what we're worried about is some sort of ecological and economic collapse, sometime, or big slowdown, or some semi-catastrophic event down the road, And so, the minister's comment about that is absolutely right. Now, if you want to try to capture that now, then you have to measure things that are like balance sheet items, like stocks. So we measure flows of carbon dioxide or greenhouse gas emissions, but the scientists convert those into stocks, right? Yeah. So we have, and balance sheets are normally financial, but you get the idea. So if we're going to have a picture of how we're doing now,
yes,
then we absolutely have to have those measures, right? It's and the fundamental reason is people care about not having a big collapse, sometime down the road. Even people who aren't going to, like me, who maybe not be around when the collapse occurs. I've got children and grandchildren, and I don't want to see that happen either. So I think there's virtually there's not only no disagreement about the importance of having these relevant multi-dimensional measurement systems, or you can't incentivize, you can't gauge where you are, and you can't incentivize the right behavior.
Okay, so which could be your idea of the future? So which could be, according to your opinion, the world in the 10 years in terms of energy ecological transition?
So I think, I expect in the next 10 years that, let me start from where we are. So for the most part, all of the developed countries have peaked and are coming down, right? In absolute terms, not just per capita, absolute. And that's a very good thing. I expect a whole lot of investment in important technologies that will enable the next stage of development and, progress in dealing with an ecological transition. And I'm kind of hoping that the global economy will peak sometime after 2030. But that's the hard one to achieve, right?
Yeah.
Because you've got India coming on stream, and then a whole lot of things have to happen in the developing world to make that possible. But I'm an optimist. I think those are the critical things. There's a lot of things that have to happen, to get there. Public sector investment on a broad cross-border flows of technology and financial investment, reducing risk. I think you and I have talked about this, but solar is pretty competitive now, but it's a capital-intensive technology. So where it looks attractive is where capital costs are reasonable. But in a lot of the developing world, capital costs are astronomical, because of country-specific risk. So there's a role for the international financial institutions to absorb some of that risk and take it away so that private sector investment can kind of forge ahead. It's a complicated agenda, but it's not impossible to imagine getting it done.
You can reach this, okay. And if you look in the future, so the long run, in the future in which there are only machines and robots will work, which could be the role, so will all artificial intelligence, which will be the role of humans on this? So we're looking at the future very long.
Well, we may work less
Yeah.
and do things that are fun. If you look over a long period of time, in almost any country, but especially the developed ones, you'll find this, dramatic downward shift. I was looking, Hal Varian, I was looking at a talk Hal Varian gave, and if you go back to the early 1800s, people were working 60, 70 hours a week. Yeah. In the Netherlands now, they're working 38.
Yes, yes.
Right? And no, it's less than that. Sorry. Yes. They're around 29. The US is around 38. Anyway, so you can see, one of the ways that you take advantage of productivity is not just working hard and consuming more and more, but doing other things. At a more basic level, I think, the transition is difficult, but basically machines basically are augmenting human capabilities. That's what they're there for. And they're pretty powerful, but, take artificial intelligence. You can produce robots that function pretty well in a structured environment, but a lot of environments aren't structured, right?
Yeah.
If you try to get a robot to be your, the gardener, yeah, can't do it, right? Can't climb a tree, yes. Can't, and this isn't entirely correlated with income levels. Same for autonomous vehicles and so on. So the movement will be, there will be, the way I think about it, I wrote about this in an essay in Daedalus, which is a very interesting book that James Manica put together, because it's got a lot of people in the artificial intelligence area talking about it. And so anyway, this was my little contribution. But basically, if you think about things like artificial intelligence, there is some substitution effect. But once it's occurred, yeah, right, then the humans don't do that anymore, those tasks. Then it's all augmentation, right? Just makes us more effective, right? And if we need less of us to produce, stuff, then we'll go on vacation. I'm being facetious, but you see what I mean. I think the adjustment mechanisms are there. The bottom line is that automation turns into augmentation over time, right? And you can see that in the Industrial Revolution. It wasn't really automation, it was mechanization.
Yes, yes.
But basically the machines came along and there's a bunch of things that humans didn't do anymore, like move dirt, dig big holes, etc. And so that was a pretty rocky kind of transition, but in the end, we had human beings working with machines. Now this one's in the kind of information processing, decision and control layer of the economy, so it's new in that respect. We haven't had any kind of machine intrusions into the enormous part of the economy where we're basically making decisions, processing information, doing transactions until the last few decades. So in a sense, it's an uncharted journey, but I don't see any reason to think that, do we have people counting your cash at a cash register anymore? No. Stick it, even people who use cash, stick them in a machine. Yeah. And most people don't even use cash, etc. Bookkeepers, we don't need them anymore, etc. Meaning, keeping corporate books and stuff like that. But those folks are doing something else. So there are a few jobs that consist of tasks, all of which have been automated. So those jobs vanish, right? Yeah. The rest of the jobs, where part of them have been automated, they change. Yes. And then the people do the ones that aren't automated and have expanded responsibilities and so on. Augmentation may not be a totally familiar term to everybody, but think of it this way. Think of a doctor, specialist. Yes. There's a vast literature that is produced in medical science, and a doctor really needs to read the small part of it that is particular to his specialization. The problem is, how do you find it? Yeah. And the answer is you have an AI, because the AIs read this stuff at incredible speed and they can figure it out. And so what happens is that, once every couple of weeks, your AI, if you're a doctor, tells you these are the 5 articles you really need to be up to speed in your field, Neuroradiology, or pick any one. I think that kind of stuff is A, useful, and B, productivity increasing. There's some really dramatic ones. You can cut this out later on if you want, but DeepMind, which is probably one of the 2 most advanced artificial intelligence development companies in the world, is in London. It's owned by Google or Beta, or whatever they call it. Alphabet.
Alphabet, yes.
Now.
Alphabet. So
DeepMind they're the folks who, won the game of Go against the best players, etc. And so they're very innovative. But one of the latest things they've done is they set out to see if they could train an AI to determine the 3-dimensional structure of a protein from the amino acid sequence, just the list of the amino acids that went into that, to making that protein. And the answer is they did it pretty well. This is stuff that, people take weeks, even months in labs to figure out. And it's a non-automated, not very easy process. So this may turn out to be a huge productivity gainer in biomedical science, right? It may not show up in, our incomes and whatnot, but it'll show up somewhere. And so that kind of stuff's just plain exciting, accelerating scientific advances and whatnot. So I think we'll see a lot of that. And this is the early stages of it.
Okay, thank you. Other questions are, one is related to financial system.
Yep.
So the financial volume increased a lot. So in the last years, if you look at the level of stock market, increased a lot. Also after 2007. Right. Now, if you look today, it's higher. So the problem is, in this context, are green investment a bubble, or do they have a solid basis from an economic perspective? A second question is related to this in general. So is such a high financial market a problem for the real economy? Because it seems that there is a disentangle between real world and the nominal one, or stock market and real world.
So there's several things going on at once. So one of the things you observe, for the most part, is that the financial system gets, quote, bigger as a country develops. And the reason is you need in an early stage developing country, you basically need banks, safe savings channels, and somebody who knows what they're doing, allocating savings to investment with reasonable efficiency, right? Yeah. So you don't have derivatives, you don't have diversification, you don't have asset management. Usually you don't have that much insurance. All that stuff that you see in the financial system in our world isn't there. So part of what you see is the financial system just gets bigger relative to the size of the economy as the economy develops. It's also true that we have bubbles, right? And we have clearly had a bubble, with multiple sources. So, so generally financial markets are more volatile than economies. Economies don't change that much, but the financial markets seem to have the capacity to kind of go all over the place. And we've had a bubble basically because of monetary policy.
Yes.
We had very low interest rates, so everybody decided if they were going to get a decent rate of return, they had to go invest in basically stocks. I mean, that's not quite right, but risk assets. And the demand for those went way up, and they drove the prices up, and then that develops a momentum of its own until it gets ridiculous, and then something gets in the way and it breaks it. And that's what's happening now. I mean, it's plunging down, and that's got people scared. This is also behavioral. We have had almost 2 decades now with very little inflation.
Yes.
So there's a whole generation of people who sit there who don't really know what inflation is. We haven't thought about it very much. Don't think it's a serious problem. And now it is, right? Yeah. And so this is all kinds of, so they're sort of scared. I mean, this is like a new environment. Whereas the old environment, which us old folks thought was, well, it's just one of the phases that the markets get into, they think it's normal, right? But it's not particularly normal. So yes, asset prices are resetting at the moment. The public ones reset first, and then the private valuations, and these matter because they have to do with venture capital and entrepreneurial activity, they set more slowly, right? Because it's not forced in the marketplace. So they lag by 6 to 9 months, roughly. And then those valuations come down. Basically, the driving force there, I mean, the thing that triggers it is those companies need capital, and the new capital coming in will come in at these elevated valuations, so you have the valuations come down. It's a very uncomfortable process because the entrepreneurs and the older investors don't like seeing the valuations go down and their investments diluted.
Yeah.
Which is what happens when people come in. So if you had around the valued a company at $1 billion, and now the new valuation is 700 million, yes, right? Then you're going to dilute. Or it's either that or those people kind of keep investing at the lower rate to prevent the dilution by having new investors come in. But then they get undiversified. So we saw this before. This happened after the internet bubble. We had a whole lot of chaos and down rounds and whatnot. We had a whole lot of companies who just disappeared because they didn't make any sense at all. But so we're going to go. This is not that thing. Many of these companies were overvalued, but they weren't ridiculous, right? Mm. So take Peloton. Peloton got because of the pandemic, got a huge valuation, right? Yes. And it's come way, way down. But that doesn't mean that selling, high-end, exercycles basically is what they do, is a non-business. It's just that it was overvalued. So it was very overvalued along with a lot of other things.
Yes, like
Netflix.
After 2000, so we had a bubble in 2000
2001.
Yeah, exactly. The dot-com bubble. At a certain point, burst.
Yep.
And some firms remained that are Alphabet, so the most important, and also
sure.
I think, why? Because when there is a bubble, in some cases, there is an increase of all of the shares. Yeah. At a certain point, remain the most important. Maybe this the case also for green, possible.
Oh, I think so. I mean,
yeah.
You know, I expect there will be excessive enthusiasm in some of the green investment areas. And certainly the index, because there's indices for kind of, green investment ones, those look pretty volatile. Yeah. And that's usually a sign that when there's excessive enthusiasm and then it kind of turns around and it kind of goes up and down. But that doesn't mean that, a significant fraction of those companies, when it comes down, there's a tendency to think, oh, this was all rubbish. And that's not true, right? Yeah. It's not. It's just the market recalibrating the valuations. And in this environment, because central banks are believed to be raising the interest rates, that for growth stocks, and a lot of these green things are in the growth stock category, meaning their future cash flows are kind of out in the future, that you don't expect them to. They're not like your gas company, right? Which collects money from all of us every month. So when you raise the discount rate, even if the market isn't overvalued, at the old discount rate, you reduce the value of those future cash flows, so the growth stocks adjust more. Yeah. Just because of standard discounting. Yeah. And then when you add this behavioral overlay, it gets quite exciting.
Yeah. And looking at so your book, the title is The Next Convergence.
Yep.
So it was written after the crisis of 2007, 2010. So also related to the period with 2011.
Yeah.
And speak about crisis. The point is, convergence is an important point also today. So if we look at what's happened in the world, we are interested. So in all this big picture, because on the one hand, we have a problem related to high volatility, maybe also a scale effect on the values in general, a new world, so transition. So the point is in which direction we are moving. So we are moving in a world that there is a convergence, first of all. Secondly, in which direction? This is a convergence with a higher level of GDP per capita, so well-being, increasing well-being, summing up a little bit all the points. Or there is also a productivity slowdown. In Italy, we know it's a long productivity slowdown, unfortunately. Yeah. And so this is a question.
So a productivity slowdown doesn't mean negative growth, right? It just means a slowdown below what we would ideally like to see. And so I think for the most part, you put it, I'll tell you what I think is going on. Productivity surges come in waves, right? It's not like water dripping from a tap. It doesn't arrive at the same rate every year. And you can see that in the data. I don't think there's any reason to think, even though we've had a period of relatively low and declining productivity growth over the last, say, 15 years in the developed countries, I don't think that's a sign that there's nothing left and we won't have another surge sometime. And we talked about it there, maybe driven substantially by the digital economies. So I think, the developed countries in principle can grow at, averaging over these surges, 2.5% to 2.5% in real terms. The developing countries can still grow, at much higher rates, provided you have an open global economy. So what are the threats to that? And the convergence has caused, the observed convergence over in the post-war period has been a function of, those high growth rates. So it's pretty much complete in South Korea and Taiwan and Singapore. It's well underway in China. It's a little bit behind in India. Yes. But, India has a potential growth rate probably of 8%. China still probably around 5%, even though they won't do it this year, notwithstanding what they say. I don't think they can possibly pull off 5% growth this year. And then a bunch of other Indonesia, Vietnam, a bunch of Latin American countries. There's two things, one's new and one's old. The old one is there's this thing called the middle income trap. where basically countries don't make the transitions, including in policy, that allow them to make the kind of final jump to advanced country status. That's a whole subject in itself. But I mean, so there's at least some risk that countries will sort of lurk around with low growth at the middle income levels. Think of it as $10,000 per capita income, and never really make the convergence. So that would be a qualification to that. But the one that worries me is that the low-income countries, which are just countries that really haven't got much of a start on the high-growth journey, or they have, but they're still in the early stages, they are subject to, I think, some pretty severe headwinds. So they have governance problems. They have very high fertility rates, many of them, which means that unless they generate an awful lot of jobs via growth, they're going to have a whole lot of very unhappy young people, who are unemployed. And then you have climate shocks, which are probably more severe on average. That's nice. I don't even know you've had trams in here. Yes. And you've got the potential for geopolitical tensions to kind of reduce access to the global economy, which is absolutely essential, especially for the early stage countries. As an early stage country, early stage developing country, lower income country, the thing that powers the very high growth rates is selling stuff to the global economy. You don't have enough demand at home, right? You get really good at something and there's this little tiny bit of demand and then you have to do something else. So, Adam Smith said specialization is limited by the extent of the market. Well, it can't get much more limited than it is if you're confined to the domestic side. Now that constraint gets less and less severe the higher your incomes are, but so it's most severe at the start, and that's why the global economy is so important. So if we muck up, with with our tensions with China or other things, the access, I don't think this is the most likely outcome, but it's at least a risk. And then you have the pandemic, which made a subset of these countries pretty vulnerable. High sovereign debt ratios, limited fiscal space, huge impact from the pandemic itself, limited access to vaccines. And it's starting to look a little bit like a perfect storm. So the bottom line is, if I had to do this again today, I would write more about the threat, of non-convergence, for the lower income, late starting countries. And I'd probably write, this is the last thing I'll say about it, I'd probably write something about digital technology because while it looks like a pretty big set of opportunities, not uncomplicated opportunities, but opportunities for developed countries, the early stage developing country growth model, unless the country is endowed with minerals and natural resources, oil, gas, which generates a lot of income they can invest in people and all that. But if you don't, so that's a subset of countries, and it's a kind of different story. But if you focus on the ones that don't have that, then basically what they do is invest in people, and the so-called Asian growth model is you sell labor-intensive, process-oriented manufacturing goods to the global economy. But if it's true, and I think it is, that we're kind of 10 to 15 years away from automating because of advances in robotics, vision, AI, etc. Automating most manufacturing and a good chunk of logistics, then it's not obvious what the comparative advantage of a low-income country is. And if there isn't one that's as powerful as a growth driver, a growth and employment driver as that other one, then that's another reason why the convergence process might either stall or go much more slowly than what we saw in the past.
Also depending, I have some other questions, but I don't want to.
That's okay.
A couple of. One is related to raw materials, so it's also related to this point. So the convergence is slowing down, also because the picture is very complex. So.
Right.
And so raw materials is a big question in my view, because on the one hand there is the point is in which China is more or less a monopolist on this point, probably on
On
the
the
real
buying
material.
side?
Yeah, on the quantity, and which is the role of America, so US, because in Europe we have some problems of coordination, and
Right.
so in some cases we are moving slowly with respect to US and China, so especially in this kind of market, and so one problem is. Where are the most important mines of raw materials that are very important for transition?
Oh, I see.
And also maybe it's the reason why in some cases because we could create some bottlenecks or some problem related to the supply chain. At a certain point, someone could stop the supply chain, like the same for energy dependence in Europe now from Russia. Is more or less the same. If we have no
true.
input, okay.
Yeah. No, these things could happen. So I guess China has a lot of rare earths. The lithium, known lithium deposits are relatively concentrated. I can't remember exactly where they are, but these are certainly vulnerabilities for the whole global economy. And it's possible that, if these transitions go fast enough, we'll have really severe supply problems, right?
Yeah.
Of the type that Renato described today. So if China decides that their interim steps on the way to dealing with the ecological transition involve huge increases in gas displacing coal.
Yeah.
Then the question is, so where's that supply going to come from? So Europe is transitioning away from Russia. We're going to build a ton of LNG facilities, I guess, in the short to medium run, because we can't just do it all green. And then the Chinese come in, and then a whole bunch of other developing countries come in. And I don't think people have fully thought through the supply-demand balances as we go forward with these things, assuming these transitions happen fairly fast. Now, the price mechanism still works.
Yeah.
And it may be that the prices of the fossil fuels in the kind of medium term get so high that they're actually advantageous to the green alternatives. Both the existing ones and the investments in technologies for new ones. So it's a kind of mixed picture.
Yeah.
But you and I have talked about this before. I mean, in some sense, this huge increase in energy prices, if it's relatively stable, is like a tax, like a carbon tax.
Yeah.
Right? The problem is that, may go up and down like a yo-yo, and then I already said my piece on, if you're going to let it go up and down, then don't party when it goes down, right? Put a floor under it as well. Then you've got protection for consumers when the prices spike. That's fine.
Yes.
And you've got resources that because you put a floor on it, you've got incentives for people to invest in alternatives, and you've got resources to put back into the system, a stabilization fund, if you like, right? Yeah. I mean, so if this stuff goes to $20 a barrel of oil, and we put a floor at 35, then we're going to collect 15, put it in the bank, and then spend it when it goes to 100 or something, or the gas equivalent.
Yes. Last point is startup culture. So you're on unicorns and which are the conditions in which it's possible to have, the rise of unicorns. I know that you have spoken about these points, so related to the situation in which in other countries there are startups. So there are unicorns. In Italy, there are some problems related to the possibility because there is probably no right environment in order to do this.
Yeah, I think it's lagging a little. I'm not pessimistic. I think it will come, because there's too much talent, young people, excitement, opportunities, and whatnot. But the phenomenon that we're seeing, especially in the digital area, things related to digital, is a kind of global explosion of entrepreneurial activity. So it used to be we could count, relatively small number of places where most of this stuff came from, and now it's just not true anymore. There's China, a whole bunch of Latin American countries, Europe, Northern Europe, etc. So it's obvious. I think this is related to the penetration of the mobile internet. Vast 6.5 billion people now, in some sense, connected to the internet with their mobile device. And anyway, the opportunities are huge. The only other thing I would say is, but it has spread globally, but it's not everywhere. And I don't mean by country. I mean, it tends to concentrate because there's a kind of interaction and infrastructure that, is quite local. Yeah. So most of the unicorns, most of this activity in France is in Paris. Much of this activity in Germany, I'm not talking about the kind of Mittelstadt, in Stuttgart and all that, but the new ones are, the new ones are in Berlin, interestingly. And I think here, this is what Renato was talking about. As I understood what he said at the end, he hopes that these conditionalities in terms of reform will actually have the effect of removing whatever barriers there are. So what I've noticed is that venture capital is not very well developed here.
Yeah.
And venture capital in these kind of high energy ecosystems is not a risky investment activity only. It's a company building activity, right? And I don't think we have yet those pieces in place. Now, whether it's cultural or whether, I wouldn't pretend to kind of give a complete answer, but I think, regulation sometimes gets in the way, the government gets in the way sometimes, I did ask a young person who was had a pretty snazzy degree basically in the business aspect of the fashion industry. Yeah. I said, I don't know why I thought I could ask this question, but I said, so here are two alternatives. Which one is your preference, right? You've got a bright future. Do you want to work for one of the great established fashion brands and have a career in that area? Or would you like to do that maybe to get experience, but then start your own company? And she said, it's the first one, for sure.
Yeah, okay.
If you asked that question at the Stanford Business School, you'd get the second one almost every time, right?
Yeah.
So there may be something to the notion that, the culture sort of determines, but it's not permanent. I remember being in Singapore where they said, well, geez, we don't have enough entrepreneurs and whatnot. Well, that's not a problem anymore. They've got startups all over the place and in this area. So it can change pretty quickly, is the bottom line.
Okay.
Yep.
Okay, thank you very much. So
thank
you for your time.
Yeah, that was great.
So thank you.
You want me to sign something?
Yes. If I ask you if you can sign this one for us, and also we can conclude here our first interview. Thank you. Thank you very much, Mike. Oh, thank you.